Aloha, everyone. Joshua Hayes at BigWaveTrading.com. Finally, a bounce day I can get behind. This entire downtrend, I've had a tough time embracing any of these new rally attempts. This one, though, it looks like kind of if you draw, I'm not going to draw the downtrend line on this chart, but if you draw a downtrend line here, kind of looks like we're breaking out above it. And it kind of looks like we have a little floor. And if you want to, which there's no way you can, if you probably get granular to a 1 minute chart, you could do a inverse shoulder, head, shoulder. So I like this bounce attempt. I still think, though, we're not done. I embrace the bounce attempt. I'll attempt to trade it. In fact, I've been telling you guys about the TTM trend momentum indicator. You need to see a pink bar before you try to catch a falling knife in the market. We got that pink bar today. But while I'm willing to trade it on the swing position side, and while last Friday I did start nibbling in the long-term portfolio, I think we have another leg down. So I'll be quick to cut my losses on any new trades, and I do have one this evening. First one all week long, and in fact, it's an ad signal to a long position that we took late February. We have not had any, well, we had one new long signal since then. It failed for a 10% loss on an end-of-day basis, but we've been taking profits so many more. Today we only have one sell signal, and it's a 50% end of day sell signal, and that's in JVA. And remember that 10% loss. This one's an 80% gain, so it's always relevant. Goosehead was an insurance stock; it was a full loss. JVA pocket pivot point signal hammer candle off the 50 got long whenever it triggered above 311. And then it's been pretty much perfection the entire way. Now, I'm too tight with my stops. I'm all out. But comparison that 10% loss, we've had a lot of winners. It's not that big of a deal. But getting back to the market, good day one of a bounce rally attempt. Kind of see balance of power swinging higher here. So that's a positive. So this is definitely a bounce attempt to work on. Now, even though you see the QQQ, see the DIA, IWM even had the TSV curl green, still below the zero line. If we do fail this bounce attempt and have a next leg lower, am I going to panic and freak out and start selling things in my long-term portfolio? Negative. Just the opposite. I will be buying names in my long-term portfolio. And to be honest with you, would not mind to see us get down to the 500 EMA to do a big reclaim by the 500 EMA. I love that line for the S&P 500. The last time it touched it, it was back here. This is what it looked like when you reclaim the 500 EMA. What happened after that, guys? After that reclaim of the 500 EMA? Look at the gain. This is just the SPY, 48%. Now, what if we're in a bear market, you might ask me? Fair question. Back here, if you guys don't remember, I was selling half of my long-term portfolio starting in August, ending in November. I didn't get back to work in the long-term portfolio till we got around SPY 400, which lines up with the 500 EMA. Now, what if you would have bought the 500 EMA on this reclaim, okay? Now, I added further, and remember, there was supposed to be an all-in signal with a close below 350 and a reclaim. Only happened intraday, but you would have lost from there to there 12%. However, what followed after that? Let's say you did go in early, okay? I can't get it to go back that far, so I got to do a 2-day chart. Okay, so let's say that you waited to get long there. You took that 12% decline. What eventually followed? A 52% rally. So even if we're early on this market and we chop around a lot, I know that it's the right decision. I look at the credit markets. I don't see any problem there. I look at like HYG. Yes, it's pulling back, but still, does it look anything like the SPY? Negative. So I don't see any trouble in the credit markets. And until I do, I don't start worrying about a massive decline unless there's rate hikes. And that's why I got out of 50% of my long-term portfolio in 2021. The Fed started to hike rates, successive amount of rate hikes. I'm starting to sell. Right now, we don't have that. Fed futures predict that we're going to have 3 rate cuts moving forward. I see no issues in the credit market. I welcome any pullbacks in the long-term portfolio. So besides that, I still also, swing side, Look at these insurance stocks. I mean, they look great. KMPR, AXS, which is going to be our ad signal, which we'll review here in a second. Root, Kins. It's just everything looks Allstate. Everything. Look at Allstate breaking out. How's Bro? Bro's in my long-term portfolio, looking great. Just insurance stocks look great. They have the fundamentals, the earnings and sales growth, and fundamentally, theme, sector, catalyst wise, I can see these insurance stocks going a lot higher throughout the rest of my life because I'm pretty sure the extreme weather events aren't going to calm down anytime soon. I'm pretty sure these insurance companies aren't going to allow themselves to have losses on the book. So BRKB is just another example of how great this sector looks. And another positive, animal spirits are still alive and well. QBTS is a high short float stock. Beautiful follow through to that 50 SMA reclaim. It's back near all-time highs, and that volume, beautiful. I love seeing this. And then I see stocks like Oklo, looks like they could be hammering out a low. SMR, our Palantirs. I just, it doesn't look as terrible as I would think it would look if we're about to go into a bear market. IDCC, here's another tech stock, and then of course the best thing that I love to see, cybersecurity names. Look at Rubrik following earnings, gap up of earnings, and instead of selling off, close near the highs. That's fantastic. Okta looks great since the earnings report. ZS, not so much, but it's still holding in there. So there's a sector that I like. TGTX, I was hoping for a 21 EMA possible entry. Never happened. TGTXO breaking out to new highs. Look at that relative strength line. WGS, which is the only stock in my weekly squeeze scan still. Technically, it's at the 21 EMA. It is actionable. I need above average volume or a pocket pivot point signal, one of these blue spikes that you see in this chart, for me to take action in WGS. But those are some biotech, medical related names that look good. Forgot to mention LMND from the insurance group, so I can just keep adding onto those stocks. SNDK, which is a spinoff from, I believe, WGS. It's the old SNDK for us old timers that remember this. BABA, Futu, look at those. They're near the highs. And then gold stocks, AEM, GLD, PAAS, SLV. Listen, it's not great. It's not like we're saying, like Reddit new all-time highs, Hood all new-time highs, Coin new all-time highs, Palantir new all-time highs, AVGO new all-time highs, Nvidia new all-time highs. But at least not everything is selling off. We're set up. We get a follow-through day in the indices, and I think we're game on. Now, another reason why I don't think we have a bottom, that put-call ratio. That thing never spiked. It did hit 1.15 intraday yesterday, closed over 1. So it's no surprise that we finally got our bounce, that the put-call finally closed over 1. But following today's session, it's back down to 0.08. 0.8. So no fear there. And then the VIX. This is super important to me. I like to see a spike in the VIX for fear to say, hey, we have a bottom. On this day in August 5th, 64% spike. On this day here on December 18th, 74% spike. We never got a spike. It was just a nice steady climb higher. We are pulling back, which is always good for the bulls, but without a spike showing me panic and fear in the VIX and put call. Despite the AAII being bearish, despite the II survey finally showing more bears than bulls, it's hard for me to say, oh yeah, we for sure have a bottom here. I just can't say that. And on top of that, the NAAIM, I think, is at 69%. I remember in 2022, that thing hit like 13%. So we're far, far, far away from everything being completely lined up. But at least it's not all dire out there. There are definitely a lot of positives. So speaking of those positives, AXS. AXX is only the third long signal since it was a long signal on this day. And all three have been insurance stocks. AXS, it worked. Goosehead failed. Now we get an ad signal in AXS. So the first signal in AXS, you'll see above average, heavier volume, pocket pivot point signal right off the 50. Nice follow through, pulled back. Now we're getting a bounce near the 50, but not quite on top of the 50, but close enough. But this was closer. We're getting another pocket pivot point signal, heavier above average volume. This is the leading sector. This is actually my favorite sector besides biotechs like TGTX and WGS based on earnings and sales growth and technical setup. So AXS, my game plan, get long above 93.92. I don't want to pay more than 94.50. So my buy stop will be 93.92. My limit offset will be 94.50. And I'm going to calculate a full 1R risk unit size from these lows. So I believe that's 89.83 is going to be my sell stop that I attach with this position. Now, if it shakes me out intraday, so be it. I can handle that 1R loss. But if you work on an end of day basis, you're going to want to see a close below this low. So AXS is the new long position for Monday. It's an add signal, hence you already see the white triangle right there, showcasing that we are still long. Now let's go and move over to my telechart version 25 charts. Once again, this stock is in my weekly squeeze scam, but WGS is the only real stock in my weekly squeeze scam. And as you can see on the daily, right on top of the 21 EMA, just don't have that above average volume to get long. This stock is also in it, but it's a foreign stock, hence the letter F, and I just don't know anything about it, and it's way too illiquid. I don't care about it at all. This is my daily squeeze scan, one stock. Sadly, it's a buyout, so there's nothing at all setting up in squeeze names. Now, I'm here because I want to show you the SPY. Now, just remove all these lines if you want, okay? So this is the chart pattern. Ignore everything on the bottom underneath the volume tab if you want. I can look at it without getting overwhelmed by it. I can look at all of this without getting overwhelmed, but I do understand some do. The whole point of all of this on here is that I have clear price support levels below. The SPY, the biggest support level is the breakout above the 2021 highs. That's that final white line. What I'm trying to show here is that there are more resistance levels above than support levels below. 500 EMA is my favorite one, 480. And then if you also draw a Fibonacci retracement from the November low to those recent highs, you will see that that level 540 kind of lines up with that fib level. This 510 level lines up with that fib level, and 478 lines up with that fib level. We call that confluence. So that's why I don't have the Fibonacci retracement level shown on that from that low to this high. I do have the one from this high to this low. I also added anchor VWAP to the high and anchor VWAP to the most recent support level. When you take all of those lines into consideration with the 50 EMA, 21 and 9 EMA, and this right here is the 200 EMA, there is a ton of resistance for this market to battle through. And this chart can be on all the indices. And I compare all of that overhead supply to the lows. Even if we go to this low, let's see where anchored, I mean, we can just start playing, look at that. There's another anchored VWAP level that we got to contend with if we use that low. If we use this low, there's another anchored VWAP level that you got to contend with. So there is a ton of resistance. Even if this is a bottom, I believe we're going to at least need a month, 2, 3 to chop and play around, move around before we can eventually move higher. We got to work through a lot of heavy resistance, and that price decline was like the 5th fastest move lower by the QQQ in its history. There's just a lot of resistance before we go higher. So if you think that we have a bottom, I'm pretty sure we're not going to see another V ramp like 2022 unless we're getting, like 2020. This was a V ramp. We got basically unlimited quantitative easing here. Unless we get that again, I don't see the same kind of play out. But let me know what you think in the comment section below. I'm curious what everyone is thinking about this market. I'm curious what you're doing. Let me know. And as always, a like and or a subscribe would really help me out. I appreciate it, everyone. Have a wonderful rest of your weekend. Aloha.